Well, hello everyone. We're here with Mike Anderson of Reliance Mortgage with a Mike's Mortgage Minute, and we want to talk about. I am looking here, and it is 11 days from Christmas. You got all your shopping done?
In less than a minute because it is cold out here, guys. But let's get it on.
You got shopping done?
No.
Yeah, me neither. I haven't started.
No.
But for those of you that are thinking about applying for a mortgage or buying a home in the first quarter of 2017, got Christmas coming up. We know we all like to go out there and spend probably a little more. A lot of people do than they need to, or they move money around or whatever. If you're a person out there thinking about buying a home, putting in an application here in the next 30, 60 days, what should people not do around Christmas time?
Well, I'll tell you what, definitely don't change jobs. Definitely.
Why is that? Why should they not? If they got a great offer from a new company?
Well, now that's a different thing.
Okay.
If you're in say you're in the sales business and you're going from in a similar type job, similar type thing, and you're making more money,
okay,
that's okay as long as you're on your job for 30 days or you have a letter of employment, an employment engagement letter, that'll work. But like if you go from say a salary job, W-2 income, to a sales job at selling cars, you're not going to get a house for a couple of years because they don't know what your income is going to be, and no matter what, even if you're on a draw, there are certain expenses you can write off being self-employed, and they're not going to do that. So if you're going to change jobs, you might call us at 214-360-9000 and we'll give you some advice on it. But if you're going from salary to salary job, that's cool. But if you're going from salary to commission job, that could be an issue.
Now, what about gifts? I can just go out there and just put on my credit card and pay them in the next 30 days, right? Doesn't that make a lot of sense?
As long as it doesn't blow your ratios. The issue with a lot of people when they're buying a house, even before they'll close, they'll go out and buy refrigerators, washers, dryers, carpet, whatever they're going to do to the house, and it runs up their credit bills, and it could affect their back-end ratio, which you need to qualify for. That's why if I were going to buy a house, I would definitely get pre-qualified first. I'd definitely talk to a loan officer, because a lot of times people call me on the phone and they actually call me on the phone and go, Mike, I want to buy a new car. And I go, how much is it going to cost you, and how much is it going to cost you per month? As long as it's in the ratios and it works, it's fine. But if you buy a car, even if you're getting a great deal on it, it could throw your ratios. So I might say, well, wait until next month to buy the car, or go ahead and buy the car. It doesn't affect your ratios. The other thing I wouldn't do, I would not move a lot of money around. And I again would emphasize, do not incur a lot of debts unless you know that you got so much income and your debts is not going to bother your ratios. But that's why you need to call a Reliance Mortgage Company, and we'll tell you exactly what you can do. Or what you should do. We're not going to tell you what to do because that's your money and your decision, but we can tell you what you can't do that'll hurt you from getting in the house.
So real quick, I want to address one thing you said. You're buying a refrigerator or buying something for the house that you're hopefully going to buy. What if they want to just go buy it in cash, and they have enough for a down payment? Is that better?
They can do that.
But most go out and put it on a credit, right? Or
they can even do that as long as it doesn't affect their back ratios. The problem here's one of the problems I think consumers, even after you close a loan, the end lenders like Fannie and Freddie that are buying these loans, they'll run a credit report 2 weeks after you close before they buy it off our warehouse line of credit. We actually fund the loans on our warehouse line. So they run a new credit report, and they see a lot of new charges on there. You've got to go through that same hassle again, explain what you're doing, rerun the ratios. So it's just a good idea to find out from the loan officer what you can do and what you can't do. Yeah, without running into problems down the road.
Right. So take your time. Don't go out there and go crazy at Christmas. Don't move a lot of money around. Don't put a bunch of stuff on credit.
It's okay if you go crazy at Christmas. Just buy me a nice gift.
Well, that sounds good.
I'll give you a good rate.
That's Mike's Mortgage Minute.